Hi everyone, Emmy Dent here, your favourite mortgage advisor. Today's video is on benefit income. Can I use it towards a mortgage? Will they take it into account? Will it stop me getting a mortgage? Please help me. Let's get started. So this is a very common question that people ask all of the time. So if you are on 100% of benefits, no earned income, and it's just you going to be on the mortgage, then I'm not going to lie, you're going to struggle. The banks don't like it when it's 100% benefit income, because if the benefits change, then there's nothing we can do about it. But if you've got some form of earned income and then it's topped up with the likes of your child tax credit, working tax credit, the banks will look at it because it should still be coming in because you're still earning. It goes off a case-by-case basis with different banks. Some banks will take it, some won't. You're best off speaking to a broker to say, this is what I get, what can we use and what can't we use. The banks are pretty okay with your working tax credits, child benefit. You then struggle a little bit for like DLA and stuff like that, especially if it's for a dependent child. Also worth mentioning that it depends on how long it's going to last for. So if your kids are getting to a point where it's going to stop soon and the mortgage is going to be for 25 years, a lot of banks won't take that into place because it's going to disappear soon. But honestly, don't worry about it. It does get included with most of it and it does really help affordability. But speak to a broker or a bank just to work out exactly what you can get. Have a great day, guys.
There's a number of questions and they all they're all around the same subject, which is to do with benefits. Now that could be child benefit and then moving on to universal credits and housing benefit and so forth. So let's talk about benefits and using benefits as part of your income for affordability. The rules are there are some good lenders and bad lenders in terms of benefit income. There are a lot of lenders that do not take any part of benefit income. So they will not take it, not even child benefit, they won't take it. Okay, so the more mainstreamy lenders, they will have, or high street lenders, they have got rules and they take an element of child benefit. Often they see it as a secondary income or universal credit or whatever this disability, whatever it is on the benefit front. They will take 50 or 60% of that benefit. There are some lenders, however, that will take 100% of that benefit. So as long as you can demonstrate that benefit has been there, certainly for the last 6 months to a year, then those lenders will take 100% of the benefit income. Now, it gets a bit messy when you're dealing with universal credit, because universal credit is essentially they could take an element of it. So the child element, for example, for universal credit, they could take into account. You've also got to take into account a lot of the lenders do not like to take income from benefit if your child is over the age of 11. So if the children are younger, that's okay, they will take it. But if they're over the age of 11, they usually, some will discount the benefit part. So it's not straightforward. It depends on what you're getting, how often you've been getting it. Is that sustainable going forward? Because there are some people that have been getting some benefit and now all of a sudden they've gone to employment and their employment is giving them more and that hasn't been recalculated yet. So it can get a little bit messy, but if you're going to take something away, take away that there are some lenders that will take 100% of benefit income on certain circumstances. A lot more lenders doing 50-60%, but it can be taken as part of the overall income. What I will say is, I sometimes get inquiries to say, I'm on benefits, can you get me a mortgage? Well, I'm not aware, and I don't think it's